Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week, everything you need to know in 90 seconds at 9 o'clock. With news, the Americans have backed away from hardline trade actions for now, agreeing to more talks. On the sidelines of the Osaka G20 meeting, the United States and China agreed to restart trade talks after the Americans offered concessions, including no new tariffs and an easing of restrictions on tech company Huawei. The Americans think the Chinese will now buy more US farm goods. If they do, the price will turn out to be interesting. The Americans get to keep the tariffs already in place, not realising that they're essentially a tax on themselves. China has persuaded the United States to return to the bargaining table without agreeing to any of the changes that the Trump administration has previously said were essential and not negotiable, but which Beijing regarded as an affront. More talks in the future, more tensions due in the future. An identical playbook to the last G20 summit in Argentina. And there is an expectation that there will be something of a relief rally in equity markets when they resume later today. The US dollar may rise. We'll see. But in something of an interesting counter-signal, Apple said it's shifting the production of the only model it makes in the US, the MacBook Pro, to China. Another closely watched index is the Chicago Purchasing Managers Survey, and that fell into contraction in June for the first time since January 2017. This is just another in the set of regional factory surveys that shows American manufacturing is either without any growth or is in contraction. The most telling aspect of is that new orders are falling. These pullbacks haven't yet flowed through to consumers, although the latest sentiment survey seems to have topped out. And it is those on higher incomes who are reporting the most concern about the future, the survey has said. And it is more than just the US. Trade tensions are generating a global slump in factory activity. China's factory activity fell as expected in June, and the expansion of its service sector, PMI, slowed as well, also as analysts expected. Both signals emphasise their need for more economic stabilisation stimulus. The EU and a group of South American countries have agreed to a large multilateral trade deal, apparently the largest one the EU has ever done. It took 20 years of negotiation. In Australia, new RBA data shows that lending to businesses and property buyers grew only marginally in May, while the fall on personal loans got deeper. In fact, American housing debt grew just 3.7% in the year to May, the slowest annual growth rate since records started in 1976. US Treasury 10-year yield is now at 2.01%, down 5 basis points from the same time last week. Gold is little changed overnight, but up $12 in a week and now at $1,409 an ounce. US oil prices are sharply lower on demand fears and rising shale output. They're now just on $58.50 a barrel, a drop of almost $1 at the end of trading last week. The Brent benchmark is down to $64.50 a barrel. And the Kiwi dollar is up 125 basis points in the past week against the US dollar. You may recall it rose 105 basis points in the prior week. We seem to be in a strong firming phase and back to levels we last saw in April. It is now at 67.2 US cents. On the cross rates were firmer over the week at 95.7 Aussie cents. And against the euro, we're up 121 basis points in a week to 59.1 euro cents. That all pushes the TWI up to just on 71.7. We aren't yet in the same type of firm we got in October and November 2018 when we firmed a full 8%, but we might be starting along a similar track. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.